The Netherlands offers one of Europe's most attractive tax incentives for foreign workers. Qualifying expats can receive 30% of their gross salary completely tax-free. Most never apply. That costs them thousands every single year. You move to the Netherlands. You work hard. But when your payslip arrives, the numbers don't make sense. Dutch income tax uses 3 brackets. Income up to €38,883 is taxed at 35.75%. Income between €38,883 and €78,426 is taxed at 37.56%. And income above €78,426 hits a top rate of 49.5%. That top rate is brutal. But here is what nobody tells you at the HR desk. There is a legal scheme that lets qualifying foreign workers take 30% of their gross salary completely off the tax table. Your employer should have told you about it on day one. Many simply don't. The scheme is still commonly known in English as the 30% ruling. The Dutch tax administration also still refers to it as the 30% regeling. But the official government name is now the expat scheme, or expatriëring. It allows employers to pay a maximum of 30% of the gross salary tax-free to employees recruited from abroad, as compensation for extraterritorial costs. Instead of claiming actual costs individually, your employer applies this fixed percentage, provided the tax administration approves it in a written decision. For 2026, the maximum percentage remains at 30%. For numbers you need to know right now. First, the minimum taxable salary threshold for the 30% ruling in 2026 is €48,013 per year. If you are under 30 and hold a qualifying master's degree, that reduced threshold drops to €36,497. Second, as of January 1, 2026, the salary portion eligible for the ruling is capped at €262,000 per year, meaning the maximum possible tax-free allowance is €78,600 annually. Third, on an €80,000 salary, the 30% ruling saves approximately €11,880 in tax every single year. Fourth, your employer must file the request within 4 months of your first working day. Miss that window and you permanently lose the benefit for those early months, and the 5-year clock keeps ticking from your start date regardless. From January 1, 2027, the ruling drops to 27% for anyone who started using it in 2024 or later. Apply now while the full 30% still applies. 3 things you can do today. First, check your eligibility. You qualify if you were recruited from abroad, lived more than 150 kilometers from the Dutch border for at least 16 of the 24 months before you started, have a real employment relationship with a Dutch employer who withholds payroll tax, and your salary clears the 2026 threshold of €48,013, or €36,497 if you are under 30 with a qualifying master's degree. Go to belastingdienst.nl and search for expat scheme. Second, talk to your HR department or payroll team today. Your employer, not you, applies for the 30% ruling by submitting a request to the Belastingdienst. Hand them the official form from belastingdienst.nl and ask them to act immediately. Third, check your pension. Employee pension contributions are deducted from your gross salary before tax, reducing your taxable income, and this provides immediate tax relief at your marginal rate. Log into mijnpensioenenoverzicht.nl today to see exactly what is being saved on your behalf. We have written the full breakdown, salary thresholds, pension deductions, and a free salary calculator at EuroDuty.eu. The clickable link is in the description. Share this with every expat colleague who has never heard of the 30% ruling.